Good morning or good day, wherever you are. It's Monday, 23rd of July 2018. This is Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything there on our site. For example, also the kids' key information documents. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international Forex and CFD broker, over 18 country offices, but I'm not the main speaker. The main speaker are the day trader of today. This is our usual scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Leonard's day. On Friday, it's Dirk's day, our leading day traders live. But it's also summertime, summer season, so Jay is on holiday. That's why in a couple of seconds, Jens Klatt will be the day trader of today. And in 1 or 2 weeks, Jay is back from his holiday. So, and of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30, usually 0.8 points, but here's also a season. It's birthday season. So in the full July months, you will get even a better spread, just 0.5 points. Why? Because 1st of July, the DAX index celebrated the 30th birthday or anniversary. So that's why you will get a much better spread. Party, the birthday, the anniversary with the DAX 30. All the details on admiralmarkets.com. Check them out. And of course, on admiralmarkets.com, you'll find also something about our regulatory background and how to contact us. You can call us, you can send us email, or visit the other channels like YouTube or Facebook. Everything, of course, linked on admiralmarkets.com. Enough from my side. Now it's time for our day trader. Like I said, Jay is on holiday, so thanks for having the time for now, Jens. What's your view to the markets today?
Yeah, hello and welcome also from my end here. Also, by the way, in Berlin, Germany, and so it's great to be here today because thanks to Donald Trump on last Friday, things start to heat up. Let's say it's usually a very good sign. What Jens just mentioned at the beginning, if many traders are off because of vacation. Because this is sometimes a guarantee for volatility. I'm not sure whether, I mean, when looking at today's markets currently, you probably will say, okay, there's not yet so much volatility in the markets. And I have to say, I'm a little surprised, to be honest. Let's see if this changes within the next hours then with the US markets opening, or probably if it changes then within the next trading days, and we have to stay calm a little and be patient a little. All in all, what we can say right here is for today, the economic docket is very, very thin. This starts to change from tomorrow onwards, in fact, so it's not listed here because I have only those events with a very high impact here on the economic calendar from Admiral Markets. You can filter it, by the way, here. Oh, sometimes, yes. So you can filter it here. And if we filter it that way, you will see that if we apply that filter, that tomorrow we have some data out there, especially here from the European Union. In this case, some PMIs, there's some US PMIs which will be published, but let's filter back here to the high impact events. I don't think that these events will trigger much volatility tomorrow. The main volatility driver this week, if it comes from the economic docket, will be the ECB on Thursday here. There's the rate decision, and the interesting thing is that I don't even think that the numbers or that there will be something published which we don't know already, but it will be more a question of what is Mario Draghi's take on the attacks from Donald Trump / the trade war, and how how does the EU, the European Union, plans to counter those steps from the White House here. I think this is the main driver. This mainly due to the fact, and that's why the rate decision itself is not that promising in terms of news. Everything what the market wanted to hear was already set on the meeting in June here. So there we got the information that the QE program from the ECB will end at the end of 2018 in December. It will then completely end. There will be no further buying of bonds or asset purchasing from the ECB. And from the mid of 2019 onwards, so in the second half of 2019, market participants probably can start to expect a rate hike from the ECB. But till then, or from this perspective, nothing new is to be expected then at the meeting taking place now on Thursday. But again, it will be the question: what happens here in terms of the rhetoric from Mario Draghi? Let us just switch back to Friday, and I've prepared the two tweets from Donald Trump here, which, by the way, resulted in high volatility, not only in the equity markets, and you probably have seen a sharper decline, especially in the DAX, but also high volatility in the FX markets, especially here in the US dollar. So Donald Trump tweeted the following. He said, China, the European Union, and others have been manipulating their currencies and interest rates lower while the US is raising rates, while the dollar gets stronger and stronger with each passing day, taking away our big competitive edge as usual, not a level playing field. And then there was a second tweet. There was the United States should not be penalized because we are doing so well. Tightening now hurts all that we have done. The US should be allowed to recapture what was lost due to illegal currency manipulation and bad trade deals, debt coming due, and we are raising rates, really? Yes, Mr. Trump, really, you are raising rates, and it started already before he became the president of the United States. But the thing is, first of all, it's a natural cycle, but this is not a discussion we want to have here right now. If he's right or if he's wrong, the thing is that there are some points made from his end, in my opinion, which are completely right. For example, when he is especially, he's not really attacking the European Union, but he's attacking the Germans for profiting enormously from a low euro. Just imagine, I mean, if you look at the current levels of the euro, we are currently trading around 117. This is still a quite elevated level for many currencies out of the southern periphery. For Germany, it's easy to let's say, work profitably with such a euro. Germany could also easily accept a euro, which is trading around 130 against the US dollar, having no big trouble with that. Probably also 135, 140 probably. But many other countries would have trouble with that. And so Germany profits enormously. But this is not the discussion we want to have here. The question is, what will be the reaction of the EU here? Because it's quite obvious that Donald Trump is not stepping back here and taking the foot off the gas here, but he's obviously willing to let the trade war with the EU escalate. And so the first reaction was a classic one. The US dollar came under pressure, and therefore we want to start, by the way, look at how the big specs are positioned. This is interesting enough right now because the US dollar, all in all, this is, you can't really clearly see it because it's a bar chart here. It's, by the way, the website is barchart.com, so it would be surprising to have a candle here. But what we want to have here, well, what you can nevertheless spot is that we failed to break above 95.30. And this failure here corresponds with a long position, which is currently at the highest level for around within 1 year, so since July. So I have to go back here. This is the green line we look at, and this is the large speculators we're currently focusing on here. And the interesting thing about this is that here, this data is from last week, Tuesday, published on Friday then. So the reaction in the positioning of the large speculators probably can be seen then next Friday, because this will be then when the positioning of the large speculators will be will adapt then accordingly. So now what I want to refer to is the following. even though that we failed to make it above 95 now, doesn't necessarily mean that we really can make it above that level. And this has to do with the fact that the euro has 58% of this basket here, which is calculated against the US dollar. And why do I say that? Well, the thing is that when Mario Draghi really starts to down talk the euro then on next week on Thursday, well then chances are quite good that the, by the way, this is Euro Japanese yen, where we just were triggered here on the short side. Let me just do the following here, probably get this back and do it that way. Oh, okay. What did I just do? Okay, so what you can clearly see here is that we just broke two new lows in Euro Japanese yen, by the way. So the setup is an open range setup. So this is probably even more interesting for you right now. We focus on the Euro USD here in a few seconds. Just to give you an idea, I've already traded this setup last week. So what we look at is a trading range in an Asia breakout system, in fact, between 3 and 10 a.m. German time. We look at the high and the low here, and if we're then trading below an exponential moving average 11 here, in this case, we're trading the short side if we break out on the downside. And this is exactly what just happened. The stop is placed above the high of this range, while here the entry point can be found at the lows of this range, and the target is then found 1.7 to 1 in distance from this opening point, which means that if we are currently facing a risk here of something like 40 pips or 44 pips in this case, our target, if you multiply 44 with 1.7, then can be found at 129.33. So the thing is that Euro Japanese yen already has seen some losses. Let's see if we can really gain momentum here. Currently, and with looking at the economic calendar, you will see that there's not, as already mentioned, not such a huge driver. Interesting enough, if risk aversion hits the market, this could trigger the move below, significantly below 130 again. But now let's come back to the to my thoughts here around the ECB. And here in this context, the interesting thing is that we've already seen a push higher on Friday. So the euro was capable of gaining against the US dollar. No big surprise, but it wasn't necessarily euro strength. It was more US dollar weakness. And the interesting thing about this is we are facing a trading range here on a daily chart. And I have to say that I expect Draghi to come out with saying something like, yes, we are willing to do, probably that's not as aggressive as I do it right now. We'll do whatever it takes, but we were willing to really take measures which are capable of saving the positive developments we've seen over the last months here. Thanks to thanks also to the euro and our measures, which aimed to some extent to lower the euro, the currency, and to devalue it. I'm not sure whether he will. I'm really sure that he won't use such a term in this language. But what he will definitely try is to somehow down talk the euro. And the interesting thing then is that if we push towards 115 and probably break below that level, if the euro really breaks below 115 here, we have another potential of 300 pips, something like that, to 112, down to 112. Now, the interesting thing is, let's come back here to this chart. If the euro makes 58% of this basket, chances are good, really high in fact, that we can break above 95 then in the euro USD here. I'm sorry, US dollar index future, if we break below 115 in euro USD, that way around. So the interesting thing now is, by the way, we have some, or let's put it that way, the Mario Draghi gets some very good bang for his buck in this case. So what do I mean by that? I mean, when looking at the commitment of traders report here for the euro, what we can spot is that currently here, we are nearly plus minus zero. So when looking at this candle, you can see that currently, in fact, the large speculators are still long around 21,000 contracts, the euro. This is interesting. This is really interesting because that means there is enough room to really reduce keep on reducing this long position in the euro and keep on building a quite big short position then in the euro. So this is what I mean by saying Mario Draghi gets a good bang for his buck, because he probably tries to profit to some extent from the big speculators in this context, and use their willingness to aggressively sell short the euro here and build another quite sharp short position, which has been seen last time here in the mid of January 2017, in fact. And the last time, by the way, when we traded around 110. So to make a long thing short, what I expect is that the ECB will come out dovish, Mario Draghi will come out dovish and do his best to down-talk the euro to counter any negative impacts, tariffs introduced by the White House and put on the EU here to counter those. And with this said, I think there's a good chance to get to see lots of volatility, especially if we break below 115 in the Euro USD. If we break below that level, on the other hand, the US dollar index future should be expected to push above 95. And by the way, now let's do something else here. Let's have a look at the euro, not the euro, the GBP USD here. Let's have a look at this. This is interesting because what we know is that the, let me just try this. I hope that it's now fast enough that this opens here. So the thing is, the reason why I said this, by the way, is I have some trouble with the resources being available for my laptop right now here, but perfect, works. So GBP USD, it's a daily aggregation here. So this is the correlation matrix. Further infos can be found on the website from Admiral Markets. EURUSD and GBP USD here, it's plus 96. What does this mean? It means that it's a high positive correlation. That means nothing more than if one currency goes up, like the euro, GBP should follow suit, or if one goes down, the other should follow. It's not set in stone that this will happen, sure, but it's important to mention it. If you're, as I am, skeptical for the euro, the thing is that such a bullish divergence currently forming here is to be taken very, very carefully. Because the thing is, some of you probably might say now, well, this is a great chance. After such a huge drop in GBP USD, I'm willing to trade GBP USD long here, or looking for long engagements. But I think that the market has a good chance to probably retrace, but I don't see it trade back above 33.50 to 34 here, but probably reverse from here if it happens at all. So meaning nothing more than, if the GBP USD really plays out this bullish divergence, it's not necessarily capable of reverting this downtrend we have seen here, falling highs and falling low, pushing us back above 33.50 to 34. But instead, we probably see a deeper regressive move and then move lower from there. So probably you should be really, really careful with long engagements right now. Probably if you are on the short side, I'd take this bullish divergence to probably start to scale out of an existing short position, start to scale out of short position. Why not that way? Short, scale it out, and then try to re-enter if we do not make it here above 33.50 to 34 around. Because again, I'm very, very skeptical for the euro, and based on this positive correlation, you should be also very skeptical for the GBP USD in this context then. And finally, what I also want to mention here is the JPY. So not only because we are holding currently EURJPY short position with the break to new daily lows, but have you seen this push here lower? That was no big surprise because I've prepared it already here. Have a look at this. So this sharp rise in the 2-year, 10-year yield curve back above 30 basis points. It's by the way, it's not that much. It looks huge, but in fact, it's only something like 6 to 7 basis points. But that was by far the biggest steepening since February here. What does it mean? It means that short-term yields are pushing lower. And this is due to the fact that Trump, even though he said he's not, he's not telling the Fed how to do their job, but what he's obviously doing is somehow he's trying to intervene here to some extent. And so now the thing is that the US dollar currently sees a push lower, and that's one of the reasons, because of the yield sensitivity of Japanese yen in general, that we are pushing significantly lower. The interesting thing now is I'm EURJPY short, so some of you definitely, for good reason, should expect me to be very, very positive for JPY here, even though it's a system trade. And nevertheless, this push lower here means nothing more than we're currently trading within a region which is very favorable, I think, for dollar Japanese yen long positions. So, which is, by the way, I'm still very positive for EURJPY, because I think trade war escalation could result in a risk-off move. Risk-off means usually unwind of carry trades, which are financed in Japanese yen, which should then shoot higher, which also means that it perfectly plays out to be EURUSD short, but also EURJPY short. Nevertheless, I could imagine US dollar perform quite well against the JPY, and probably we are trading here within a region which could be very, 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 very interesting for long engagements. And I think, by the way, that's a long-term outlook. In fact, we can be positive for JPY as long as we trade above 108 now. So everything above this low here from the last week of May is definitely something to be considered positive. And we still have a very good chance to push at least up to 114, probably 114.50 to 115. So going long from here is, I think, very interesting to consider. Yeah, and so in fact, that's it all in all from my end. I have several other ideas probably on Aussie dollar and all this, but the problem with Aussie dollar, NZD, so Kiwi, but also Canadian dollar currently is that I'm somehow very skeptical, very, very, very skeptical around the overall mode in the market, the current bias. I consider it to be more bearish, to be honest. And the thing is that in such a market environment, you don't want to necessarily be long the Australian dollar or the Kiwi or the Canadian dollar. That's why I'm a little reversed here, let's say, or reserved. I'm not sure whether that's the right word. So that's a question, by the way. What about the BOE hiking rate next week? What's your view on that? Oh, perfect question, by the way. I just found out that I have a small short note here, right at the bottom of my one pager, and in fact, that's exactly what's written there. So sorry for not making this a topic before, but thanks a lot for asking. What did I write down here is that the thing is, so I'm still skeptical here. The latest data from last week could indicate no hike from the Bank of England. So remember, last week we were talking about retail sales. There was also the employment situation, if I'm not mistaken. And all the data coming out there disappointed. Before the data came out, at the beginning of last trading week, so 1 week back from now, there was an 80% chance, when looking at the swap markets, there was an 80% chance that the Bank of England will hike at this meeting next week. And this dropped from 80 to, in this case, then 50%. So currently, it's in fact a coin flip. And the push lower here, by the way, and as you can see it here, it started on Tuesday already. So we were quite stable on Monday, but then sold off and fell below 130 from Tuesday onwards. In the upcoming days, and started to reverse, not because pound sterling was so strong, but because the US dollar was weak. So those data which came out was disappointing. And with this in mind right now, and also with the ECB around the corner, I think we have to wait for the ECB, but I think chances are good that the Bank of England probably will step back from a rate hike next week. So it's a very close call. It's in fact a very close call. So I wouldn't be surprised if they hike rates, but I could also well imagine after data from last week, with the trade war fears currently, with the comments from Trump towards Theresa May and her handling of the Brexit affair, that's the wrong word. So the Brexit negotiations, and with saying, well, probably a trade deal between the UK and the US will be off the table if she negotiates in the direction she's currently doing with the EU, aiming for a soft Brexit. So when looking at all this, I could imagine that also the Bank of England steps back from a rate hike to, probably get to see a push below 130 in pound sterling against the US dollar, again, to counter potential negative impacts, such a not taking place, trade deal between the UK and US could form if there will be the negotiations around the Brexit in this direction. So it's a close call. Currently, I could imagine the Bank of England to not hike rates. That's what I want to say, and that's it for my now. So.
Thank you, Jens. Tomorrow is another day. Tomorrow is a new day trader. We have 5 days a week, 5 different traders. So hope to see you all tomorrow again. And if you'd like to see that live webinar again, a couple of hours later, it will be recorded, available in our YouTube channel. Next week, the time is running fast. We will have some special webinars about ESMA. ESMA and the new regulation in the European Union is the topic of the year, talk of the town anywhere. All CFD traders in whole Europe will be affected. So don't miss it. I sent you here in our chat live in the webinar the registration. And if you see the video, just go to admiralmarkets.com. In the webinar section, you can also register for the 3 webinars next week around ESMA. Thanks for now, and hope to see you tomorrow again. Real-time daily trader, same time tomorrow. Bye-bye.